All right, so I've seen a lot of people that have the wrong mindset, right? They say Wall Street is full of fear and greed, right? And you'll see it. A lot of times people will sell at the worst possible time when things have crashed, like we saw in 2008, 2009, when it actually, looking back, was the best time to invest. It was time to double down. And then we'll see everybody piling on when things are crazy, crazy, crazy expensive and the stock market's gone crazy, all these people getting in. And so it's important to know your own mindset to get a correct mindset and a focus when you're looking at investing. We're gonna get into that. The great JP Morgan said this quote, and they asked about what the stock market will do. He said, it will fluctuate. And that's how we feel a lot about our temperament, right? But realizing if we can have a steady temperament and we can just approach things from a rational point of view, we can do very well. So I'm gonna go over this in 3 easy steps. Got a great quote at the end. I'm gonna share my secret of how, at the very end of this, I'm gonna share my number one thing that I do to keep a good mindset. So stick around to the end, you're gonna love it. Let's jump in. All right, so welcome. If you're new around here, my name is Bronson Hill. I'm the CEO of Bronson Equity. We help people get passive income through investing in things like real estate, alternative assets, businesses, and things like that. We also have our own investments that we do. We have over 200 million in multifamily and other sorts of assets. We've raised about 40 million from investors just like you. So let's jump in here. So the first thing is overcoming fear and greed, right? So how do you live from a place where you're not being motivated by either place? We talked about that. Most people will sell at the worst possible time. They'll buy when things are hot. It's featured in a magazine, it's on TV, it's on the cover of Forbes. Your Uber driver's talking about it. You know, when your Uber driver starts talking about an investment or start talking about buy this certain crypto, maybe don't buy it, right? Maybe it's time to kind of go the other way. But human psychology just is we get really excited about manias, right? And if you look back at the history of this, the tulip mania was a big one of these, right? Back in the 1600s, I think there was one particular tulip bulb that went for as much as a house, right? A tulip bulb, right? And then the whole thing crashed and it was worth less than it was before. And so we go into these manias. And so, but this is not for you or for me, right? We're not going to be those panic sellers or those jump on the bandwagon buyers when things are high. We'll be a contrarian, right? So how do you do that, right? What are the things that you need to do? Well, one thing is you need to be someone who really looks at the intrinsic value of an investment and honestly often will look for out of favor investments. And we're going to get into that here in a minute. So timing the market. Let's talk about timing the market, right? Let's talk about the elephant in the room. Can you time the market? I don't think it's wise, and any expert that I know would say, timing the market is very, very difficult. You cannot time the market. However, I have a caveat to this. You can find markets that make sense for you. So if it doesn't look good in real estate or multifamily or whatever, well then find something else. Look at businesses. If it doesn't look good in businesses, what about precious metals? What about other things? And if you just simply find from historical valuations, you can see in the stock market how things are valued. What is the price earnings ratio? That's a great relative, or the PE ratio tells you the relative value of how much you're paying per share for how much dollars of earnings you're getting per year. It's a great way to really measure value. And that exists in other things too, or historically. If you look at historical valuations, how are we doing in this specific thing? And so there are all kinds of opportunities. That's what we've branched out. We branched out when we saw interest rates rising a couple years ago. We've raised over $16 million for ATM machine funds with the fourth largest operator in the country. We do oil and gas. We've got car washes. We've got other businesses. We've got senior housing. We've got all kinds of medical office buildings, and personally I do a lot of these things as well as precious metals. So we're doing a lot of these different things, but it's important to not try to time the market, but to look for the right markets, right, at the right time. So there's a subtle difference there, but hopefully you got it. Third thing is really self-coaching for success. How do you coach yourself so that you don't get in a place where you're freaking out and you're panicking and, oh my gosh, I've just got to get, this is what kind of the thinking that goes into it is, okay, this asset has dropped by 50% or this stock has dropped by 50%. I've got to get some money out because I can't afford to lose this money. Well, you just have to kind of sometimes take your hand and just your own hand and say, hey, it's okay. I'm talking to myself, hey, Bronson, it's okay. Like, you're going to be all right. Maybe is it time to put more in? Is it time to maybe just hold out and wait and say, hey, maybe there's an opportunity here to actually make some more money. If the underlying value is there, it can be a really, really awesome thing. Warren Buffett says, if the long-term view is good, if you have a good long-term perspective, sometimes short-term, like when it's like uncertainty or short-term uncertainty is okay when there's good long-term uncertainty. And that's a great way that we get paid. Because again, as individual investors, hopefully, we're looking at the long term anyway. Wall Street looks at the next 3 months. They've got their next quarter, they have the next things going on. If you can look beyond that, I'm okay dealing with a bad quarter or a potential bad quarter or being unsure, knowing that whatever the asset is going to do well over time. So that's one way you can kind of take advantage of it. And then you look at what Warren Buffett did. he basically made money because he was able to control his own temperament. He said that's the number one thing, the number one quality investors can have to make a lot of money or to be great investors is to manage their own temperament. So one example of this, I can share a lot of examples about Buffett, and I talk about Buffett a lot on the show, but he basically, look at Geico, right? The little gecko with the insurance. Geico Insurance, he paid $2.35 billion for it. This was years ago. This was, I don't know, it was 20, 30 years ago, a while ago. And he's made just on that one investment over $45 billion, right? So he's made about a 25x on his investment. But at the time he bought it, there was some concern. Will Geico even make it? Will they go out of business? We're not sure, whatever. And so again, when you see an opportunity and you can really get in and understand it, and you can say, hey, I think this is actually an opportunity I can do well. So another thing I will say about this is be careful who you talk to. A lot of your friends and family are people that, if they're Chicken Little and the sky is falling, don't talk to them. Don't tell them about it, right? A lot of times you got to get control of your own, really make your own decision, your own opinion. Talk to other savvy investors, but really try to just, as much as you can, make your own decision. Okay, so the number one thing that I do, I want to share with you that I think is really critical. I have not shared it here yet, but it's something that it's very personal, but I think it's really applicable. And I have some other videos on this as well about mindset, is really the idea of affirmations. So I have a morning routine, I read my goals, I go over things that I want to do, I do some statements, and I have some affirmations. And it can sound a little cheesy, but what you can say is, here's one I could say, I have a great temperament that even when things are not going well, I keep my cool in that. I take advantage when things are not going well, instead of panicking, right? Those are some investor affirmations, but it could be other things. It could be like, I'm worthy of God's love, or I'm worthy of love and belonging of others, right? It sounds a little cheesy, but in my life, as I've started to say these things, I started to feel and experience them, right? So in your own mindset, you can do really well just simply by saying, hey, this is who I am, or even having goals and going toward those things, being very intentional about it. So anything related to goals, anything related to mindset or scaling, I'm just totally a nerd about that stuff because I think it really helps you get where you want to go. So I want to share this quote with you. This comes from the chairman of Starbucks, Mellody Hobson, says, the biggest risk of all is not taking one. And that's, I think a lot of investors, if you're like me, we can all be there, right? We get the analysis paralysis. And again, I spent 6 years looking at deals, going to meetups, didn't do anything. And it wasn't until I actually made a decision, hey, I'm gonna leave my job in 3 years, that it began to happen, right? I was able to fire myself, right? And that's my hope for you too, is that you're able to fire yourself. If you haven't gotten my book, please go check out my website, bronsonequity.com. You get the first 2 chapters for free. You can also find it on Amazon, the whole version. If you get the book, you get the audiobook for free. So thanks for the support in that. And then also this video here, I want to share with you how to leave your job and stop working. Check that out up here. A lot of mindset stuff there. So anyway, thanks for taking the time to educate yourself. I look forward to seeing you on the next video.